questions. This round table, which is exiting the storm, are we rowing in the same direction? And to discuss this, we have a very distinguished panel with us. And I've already warned them. It's because they are so much experts that I'm pretty sure many of you want to ask them many questions. So they get little talking time, and we get a lot of interaction time. So start jotting down your questions, because you will have time to do that. We will start off with our first panelist, who I remind has 5 minutes to introduce the subject, who is Mr. George Lemonidis. He is the Deputy Head of Unit of DG Enterprise and Industry. He's been in the Commission since 1981, and he previously worked in areas such as the Common Agricultural Policy, the Audiovisual Policy, External Relations, and Trade. But he's been in DG Enterprise since 1999, and he has worked on economic analysis, competitiveness, benchmarking in the context of Lisbon and Europe 2020 strategy. So, George, you have time, 5 minutes, so I'm timing you, and then I invite all of you already to start preparing your questions. Thank you.
Okay, excellent. Thank you very much. So yes, the introduction. I will try to answer right to your question. I mean, are we rowing in the same direction? What are we doing? What progress has been made? And I will argue that almost all of the actions that we had foreseen in the action plan for SMEs access to finance at the end of 2011 are now in different implementation stages. I will name a few. For instance, the single passport for the structure for the venture capital management teams. It is now in the final stages in trialogue in the European Parliament and Council. MiFID, which was an important issue, is in first reading in Parliament. All the discussion about the Basel III, it is almost finished. I mean, we have already a political agreement, and this political agreement covers SME financing in a more favorable way than before. So things are being done in the regulatory and institutional level. I will mention also, of course, the decisions of the European Council, the next multi-annual financial framework. It has been decided. The increase of the capital of the European Investment Bank, of which my colleague, Mr. Pessner, will speak, I suppose, is an important move. So things are being done. What we don't have is, for instance, we don't know yet exactly what will be the volumes of what will be exactly the budget of the financial instruments in the next financial framework. It is being discussed now. What we know is that we have excess demand, that whatever is put there, it will find its way to the market. Voila, I think I will stop at that, and I will offer it here.
Excellent. You used a little bit lesser than your 5 minutes. Very good. We now move on to Mr. Mark Pevsner. Did I pronounce it well? Okay, great. He is the head of the SME unit in the European Investment Bank. Quite a history within the bank in dealing directly with SMEs. You have been involved in widening the range of counterparts for EIB lending and maximizing the impact of EIB's lending on SME borrowers. A number of projects in the past in relation to SMEs. So this is really a core part of what you do, and we are all very eager to hear more the perspective of EIB towards SME lending. The floor is yours.
Right, thank you very much. I'll just take my 5 minutes to give a quick introduction to EIB and where we are, where we see ourselves going in terms of helping to improve the supply of finance to SMEs. The European Investment Bank is one of the institutions of the European Union. It's owned by the member states, so effectively it's owned by all of you. We are a policy-driven bank, and one of our 6 core objectives is to provide support for SMEs. We do that by lending on an intermediated basis. We lend to banks which are well established in markets in member states, including cooperative banks, and those banks on lend our financing to reach SMEs. Now, if we look back, in 2007, before the crisis, the SME lending activity was fairly stable at around €7 billion a year. And since, I think we can see 2 stages in what we're doing. The first was a short-term provision of liquidity, and the figure of 40 billion between 2008 and 2011 was mentioned. That was to ensure that banks had enough finance to continue to be lending to SMEs. In parallel, once we dealt with that short-term liquidity structure, we started putting in place a series of more targeted measures to address specific issues that were either coming up for particular types of SME or in particular countries, while continuing to lend at very high levels. And for example, last year, we announced our figures at the end of last week. We signed more than €12 billion of financing for on-lending to SMEs. The partner banks we worked with allocated about €11 billion to 79,000 small businesses across Europe. And that more than half of those loans were loans for under €35,000, you know, for relatively small businesses. Something like 25,000 were what the EU would classify as microloans, under €25,000. As George mentioned, we had a capital increase. The member states agreed a capital increase for the EIB last year, and that will permit a much higher level of support for SMEs and for other entities. The range of initiatives to increase growth and employment across the European Union, and we expect to increase the financing that we're providing for SMEs by €3 to €5 billion per year over the next 3 years. And that will create, we expect, up to an additional 40 billion of additional investment in SMEs. What we want to do in doing that is to maximize the access of SMEs to EIB finance. And that means continuing to work with the partner banks where we have effective, long-standing relationships, but also to make sure that EIB finance is potentially available through other channels that are reaching SMEs and are currently being less served by EIB financing. And I'd single out particularly smaller regional and cooperative banks and financing institutions and smaller lessors. The EIB group includes the European Investment Fund, the EIF, which is our specialist developer of risk financing for SMEs and for innovation. And they have a very important role in providing these more targeted measures through SME lending guarantees, which were talked about in the session this morning and are an extremely effective method of stimulating SME lending because it's a great deal of leverage, through their investments in venture capital funds, which are then on lending to SMEs, and through their deployment of various European Union instruments. We can talk about some specific measures, right? We won't talk about some specific measures until they come up in questions, but I'd be very happy to talk about in the future the measures that we're taking for SME ABS, for venture capital, for microfinance, and in other areas. So thank you very much.
Thank you, and I'm pretty sure you're going to be asked about the specific measures. We pass on to Gerhard Humer, who's the Director for Economic and Fiscal Policy at the UAPME, known to all of us as UAPME, which is the European Association of Crafts, Small and Medium-Sized Enterprises. And here I would expect to hear a little bit the other side of the coin to all this. So Gerhard, the floor is yours.
Thank you, Anna Maria. In principle, we have to say that the main projects we have done at European level during the last 2 years, meaning the Basel II implementation and on the other side the draft of the new generation of programs, goes very much in the direction we have wanted. So we are in principle quite satisfied with the development over the last 2 years at the European level. But this does not mean that we have weathered the storm. If you look to the current economic situation, we are back in a recession again. We will publish next Tuesday the next SME barometer and business climate index, and it is still a downward development, and especially SMEs are very much hit by the internal demand crisis we have at European level at the moment. And we see in the same time that there's not enough public money anymore around to finance a new upswing, economic upswing with further debts. That means we have to do more to ensure at European level that make the private sector doing more investments, etc., etc. And therefore, these programs are very important. We have also to see that SMEs are a very different animal. We have a lot of very small enterprises which will also in future depend on loan financing. Therefore, we have now this discussion about not only loan guarantee schemes financed and co-financed by the European programs like COSME and Horizon, but as my president already said at the beginning, it's very, very important to have now better access to structural funds money, and it will be on you at the national level, at the regional level, to use these opportunities in future. We have not going that far in another problem for SMEs, namely SMEs which want to do riskier projects, which want to do innovation, which do startups, etc., etc. Here we see that the banks are less and less willing to finance these investments, to taking these risks. And it's not a criticism on the bank side, but this is just the situation, and therefore we was lobbying to get more risk-carrying instruments like mezzanine instruments, like venture capital, business angel support, etc. Here we got something, but we will see if it works. We have no proof that this really works. We have some good examples. We will come back in the discussion in the afternoon to this in Germany, in France, but it's not enough to have money available to start riskier projects in SMEs. And the second part which has been solved was a little bit the banking regulation side. So we are satisfied with the outcome of the Basel III CRD4 negotiation. So this is also done. What I would to put more the focus in the discussion now is what are the next steps. From my point of view, as regards SME finance, the next big question we have to solve in the next years will be now, is it really the final orientation, the final way to say, let's increase public guarantee schemes to stabilize SME finance? Because this means in the end that the taxpayers somehow should carry the risk for doing business. And this is not a long-term vision which we like that much. So we would like much more to think about what can be done to get private money into riskier projects for SMEs. And this is also the way we will approach the Green Book discussion Olivier has announced this morning in long-term financing. At the moment, we have countries where we have 90% and more debt ratio in the balance sheets of SMEs. There are reasons behind why this is so. There are tax system reasons behind. There are systems of the support systems. So if you have 40 years, 30 years SME support only done by state aid for loans, by subsidies for loans, by public loans, then you shouldn't be surprised that the loan ratio is that high. We have now to look more how we bring equity in the, or how we keep equity, how we motivate company owners to let their equity in, etc., etc. This is a little bit the direction we want to discuss in the context of the Green Book, and this is what I really would also hear from you today, what you think about this item. Thank you.
Thank you very much. And we pass on to Alessandro Messina, who's an economist, and he is the head of the bank firm relationship and special projects office in Federcasse. It's the Italian Association of Cooperative Banks. He's also a scientific advisor on non-profit economy and public administration at the Faculty of Economics at the University of Rome Tor Vergate. You have also quite a vast experience in Italy on SMEs and SMEs financing, so we look forward to hear from you about the subject.
Well, first of all, thanks for the invitation, and I would like to say that even if we didn't arrange anything before speaking, I would say that what this one, okay. What the colleague said is very interesting for a bank perspective, of course, because we know that credit is not always the solution, and we are in the phase where, in a historic phase where credit has been spurred very much, when possible. Just something about Federcasse, the Italian Federation Association of Credit Cooperative Banks. We are speaking about 400 small local mutualistic banks, almost 400. In terms of market share, credit cooperative banks in Italy represent 10% of loans and savings, almost. But they have very higher level in the credit to some categories of SMEs. For instance, in terms of micro-enterprises, businesses under 10 employees, credit cooperatives have 17% of loans. 22% in respect of handicrafts, 18% for agriculture businesses, and 15% for overall non-profit institutions. We are, of course, very close to the real economy in terms of our business model is based on that. So savings and giving back to the real economy what we collect from the community. Let's say that we are a very traditional, simple banking model. And this is a relevant point now that we discuss about new regulation on banks. Let me say just that. One question here is, are we rowing in the same direction? The point is, what direction? Because just two reflections. One point is that we are still waiting for a regulation, a real regulation on derivatives. I mean on speculative finance, which nowadays is the dominus of the markets. And the second point is that now, in respect to 3 or 4 years ago, to build up, to manage, to develop a local cooperative mutualistic bank is very more difficult, more difficult than before. So what is this direction, and what direction would we like to pursue for the next future? That's all I mean.
Thank you very much.
Oh, sorry.
It's okay, don't worry. Thank you very much. What direction? Very, very important question to be asking, which is the direction we're all going towards. But I'd like to start off, if you don't mind, with a question myself. And I'll address these questions to all of you, but primarily to both George and Bernard, to George and Mark. Why are cooperative banks so different from national banks? Because here today we are speaking about cooperative banks. So what is the distinction? Why are they so special? Why are they so different in your perspective? And in regards to SME finances, how did cooperative banks react during the crisis since 2007, 2008? So your perspective of this. And also thinking that, George, you mentioned CRD and Basel III. Sometimes also cooperative banks are SMEs themselves. And sometimes all the regulations being put may be okay for big banks to handle, normal banks to handle, but particularly a struggle also for some cooperative banks. So, I don't know which of you would like to start.
Perhaps I will start. Thank you. First, I must like to say we don't make any distinction among banks. Our instruments are open on a permanent basis, and then it's first come, first serve somehow, how it is used. So it's permanently open calls. Now, we have a lot of cooperative banks among our financial intermediaries, passing on guarantees for loans. And there is a very simple reason. It is they are more local, they are more closer to the SMEs, they know their market, so they know much better SMEs and the inherent risks of doing business at this level. So it is one of our intermediaries of choice. Besides, if you look in our list, we have 40 financial intermediaries throughout Europe in 20 countries. You will not find big commercial banks, with one or two exceptions. It's always either mutual guarantee societies or smaller banks at local level. And some promotional banks, public banks also, that cooperate with us. So I will not go into the regulatory issue and whether the risks are the same or for as larger banks. Obviously, they don't represent the same systemic risks as larger banks, but you never know. It is something we have seen so many smaller banks fail during this crisis, which was a financial crisis, I must say. So that it is indeed, I think it's reinforcing the prudential standards and the monitoring and the robustness, financial robustness of all the banks is a common good. It's something that we have to go through this time. Thank you.
I think George has said a number of things that I was similarly jotting down. I broadly agree with him. EIB similarly does not make specific distinction by the type of financial intermediary that we work with. So we don't have a particular bias for or against a particular type of financial intermediary if they can deploy our SME finance. We work a lot with cooperative banks in many European countries because they're very good at lending to SMEs. And that, I think, but you will probably know better than I do, is because co-ops, by being smaller, tend to be closer to their markets, tend to know their customers, tend to be better at making the most appropriate credit decisions given the specificities of their customer's business. I think we would see the question of why are co-ops so different from national banks? Yes, they are, but they're also, from our perspective, very different between countries. There's an enormous difference between the nature of the cooperative bank structure in, say, Poland, in, say, Germany, France, or Spain. And so there are different types of co-op banks that appear to be adapting to different national environments and different national needs. The other point I would mention in terms of cooperative banks, we ask the financial intermediaries that we work with SME lending to do a number of things in terms of lending money beyond the funding that the EIB provides, transferring information to SMEs about the EIB role, and also transferring what we call financial advantage, which is typically done by charging a lower rate of interest to SMEs than would be charged otherwise, to reflect the competitive pricing that EIB is able to provide them. And I have to say, cooperative banks are very good at passing on that financial advantage and trying to maximize the extent to which they are sharing the impact of EIB financing with their SME borrowers. So I'm not sure if that gives you some specific issues, but it's certainly our view of why we're working with the cooperative sector.
So in essence, we do not make distinction. You do not make a distinction between the banks, but clearly we know, all of us, that cooperative banks are better to lend to SMEs. Gerhard, can you give us a bit your experience also from the SME perspective of working with cooperative banks?
I think most can be explained if you look back in history why cooperative bank exists at all. In 100 years and more years ago, when commercial banks was not able to provide lending and financial services to SMEs, business owners went together and said, we create our own banking systems, the cooperative banks. The businesses was the owner of these cooperative banks, it was the corporates they was in the management, the advisory boards, etc., etc. And these banks had, as what I said before, a different vision. Yeah? They are not profit maximizing banks, they are trying to maximize the welfare in the region together with their owners, with their farmers, with their cooperatives, etc., etc. And in many countries we have still these structures, and here you have a different situation compared to commercial banks in other areas. When commercial banks, before the crisis and still now, expect a return on capital, 15% is quite low, 20% is good, 25% is perfect. The car industry is happy with 8%, with 10%. And the cooperative banks are happy if they can earn the money to stabilize them. They don't have to make profits. And this is the reason why they can provide loans cheaper than commercial banks. And the second thing is, as I said, if they stay in the region, if they work together with the business community in the region, they understand better the risks and the chances of the regions, and they are better to charge the risk of innovation of new companies. They know the personality of the owner, and this makes a huge difference, which you cannot find if you go to a huge international commercial bank where the credit decision is taken by a computer for SMEs, not by a person. That's the difference.
Alessandro, do SMEs have different expectations when they go to a cooperative bank as opposed to going to a normal bank, a big bank?
Let's say that it depends if they are member, because remember that we have a cooperative structure, so about 1,200,000 members in Italy are small businesses or private individuals who are member of the cooperative. Of course, in this case, the relationship is very intense, high, and they have expectation. Otherwise, I think they maybe they are free rider on the market. Nowadays, we can say that not always you can have this different approach in the customer. Unless you are in one of those 500 local towns in Italy where small cooperatives are the only bank. In this case, of course, cooperative banks are like the municipality in some way, and the expectation is very high. But I would like to go back to the question before you made to the colleague, just to say 2 points, 2 reflections about the European measures for banks and local banks. Let's say that we appreciate very much the EIB and the EIF efforts to improve the relation between banks, the banking system, and SMEs. And whenever we can, we stimulate our banks to go and exploit these opportunities. Recently, we led 2 small banks to the Progress program of the EIF, which is for microfinance. And for them, it has been the first time that a small local bank signed a loan with the EIF. And it is an important step, we think. But of course, we see some problems. Equal opportunities do not reflect, we think, in equal access. I don't know the figures, but probably if we look at the share of access to the measures, I suppose they are very different from the share, the market share I said before. I almost sure for the Italian market, I don't know at a European level, but it will be interesting to understand. And I think there is a problem of procedure, of complexity, and maybe also of integration with the national measures. And I think this is the direction where we should go. Okay.
Gerhard, you mentioned that the returns of cooperative banks are usually much lesser. That's why it's also they can offer loans at a lower rate for SMEs. But prior to the crisis, it seems that there were some cooperative banks which tried to be very much like commercial banks and set up risk financial instruments, really just maybe to get a better return. Is this really the case? Is this happening, or is it just an anomaly which happened just before the crisis?
Yeah, but you have to see the situation in different countries. You have countries where the cooperative banks totally disappeared. You have countries where the cooperative banks moved into a normal commercial bank. And you have countries where you have still these local structures with cooperative banks owned by the cooperatives. And this is the difference. And of course, if you look to, let's say, the Rabobank in Netherlands, or also in Austria, the Raiffeisen International, they are behave in the market like commercial banks, that's no doubt. But some of them have still a structure, the downside where they have still decision-making in the region, and this is the difference. And if there are overall a commercial institution which shareholder interests, or if they are still on the ground a layer where the cooperatives are existing. This makes the difference.
Right, so there is quite a distinction of where they are, which country, which is the history, and how they developed over time. I turn on to you. Please, first question.
Thank you very much, Mrs. President. I have one question to the representatives from the Commission and the EIB, EIF. The question is that the EIB and the EIF provides in an indirect way guarantees and loans. As most SMEs need small loans, they can only comply for these guarantees via the banks in the member states. In some member states, a limited number of banks are active. For example, in the Netherlands, basically there are only 4 or 5 banks and they have, I don't know, 90% of the market. That limits the choice of the SMEs, and it may also limit the choice, limit competition in such member states with limited numbers of banks. That's not in line with the spirit of the internal market. And then why are there not more trans-border activities of banks to SMEs? For example, banks in member states of a country where there are a limited number of banks active could become more active. So my question in the end is, how can this trans-border lendings to SMEs be increased via a policy of the Commission and via the ERB, ERF? Thank you very much. And of course also in line with internal market, Europe 2020 and so on. Thank you very much.
Thank you. And for the benefit of the audience, we of the ESC know you and know you're very active in this area. But could you introduce yourself for the benefit of the rest of the members?
My name is Schreuder and I am of the Dutch section in the employers delegation.
And I ask each person who intervenes to please also introduce yourself. Brian and then Just, and then I'll ask you to answer the questions and we'll go for another round.
Thank you, Anna Maria. My name is Brian Cassidy, and guess where I come from? And I'm a member of the Economic and Social Committee. It's a general point that I wish to address for all of our speakers concerning this business of being local. Everybody accepts these days that being local is a good thing because we have all been badly let down by the big national banks and let down even more badly by the big international banks. However, there is a little bit of an anxiety about localism. It's not all that long ago that we were worried about, for instance, unhealthily close links between some local banks and indeed municipalities. Somebody one of you just used that phrase, that local banks are like municipalities. Is that a good thing, bearing in mind some municipalities? That's the first point. Second point is that on the basis of the past experience in some countries, and I won't identify them, in some countries there appears to be an unhealthily close link between the local banks and local politicians, or in some cases national politicians. Is that a good thing? And the final point I'd make in this connection is that, of course, there are there's no doubt at all that the majority of local banks are scrupulously honest. But we do know, don't we, one or two examples where local banks are not scrupulously honest. And I'll choose a bank which has no supporters here, the Banco Ambrosiano, which is a local bank, or you could argue was a universal bank. But that didn't set us a good example, did it?
First we have Just and then the gentleman just behind him. Thank you.
Thank you, Mrs. Chair. My name is Joost van Iersel, and I am at the moment chairing the steering committee Europe 2020 of the ESC, which has made me very concentrated and focused on national situations, regional situations, that indeed, as several of the speakers have pointed out, differ greatly between countries. As my friend Ulrich Schröder asked already, why is there so little cross-border? I would like to approach it from a different point of view. there are undoubtedly regions where the situation is rather positive in comparison as opposed to other regions. There are practices probably, when you look at the whole panorama of cooperatives, that are excellent as opposed to less excellent performances, regardless of the elements my friend Brian Cassidy put forward, but also in the market. Now, my question to the EIB, Mr. Pevsner, is, do you have an overview of those practices that could be categorized as excellent? And Mr. Humer, the same question to you.